The people lost access to medicine, lost access to food, and feel that this is the final moment. The response of the government was excessively brutal.
The stocks, the bonds, the mutual funds, the ETFs, the annuities, the CDs, the savings, this is what it's based on. So if you have something that's created from dollars, pays you out in dollars, and can only pay you back in dollars, when the dollar goes to zero and it's at 4 cents now, what's the value of those things? So what happens to those people that are depending upon them? Look at Venezuela.
What's happening on this bridge is an example of the enormous economic crisis in Venezuela right now, with thousands of people coming from Venezuela to Colombia to buy diapers, food, and medicine. They claim that this is the only way they have to cover some of their basic needs.
Guys, thanks so much for tuning in. I really very much appreciate it. We've got a special treat for you today. It's always nice when somebody new comes on the scene and just captures your attention and you're like, where in the world did she come from? Well, it's Lynette Zang. She's a former stockbroker and the chief market strategist at ITM Trading, itmtrading.com. You may have seen her interviewed by Greg Hunter. She just did a great interview with Jason Burak, and she is very well informed about our system of debt and how it's about to implode. Lynette, welcome.
Thank you so much. It's really wonderful to be here today.
Well, it's a thrill to have you. And you know what? Let me just start with a quote from our old pal Thomas Jefferson, who I think got it quite right. Tell me if you disagree. If the American people ever allow private banks to control the issue of their currency, first by inflation, then by deflation, the banks and corporations that will grow up around them will deprive the people of all their property until their children wake up homeless on the continent their fathers conquered. I believe that banking institutions are more dangerous to our liberties than standing armies. The issuing power should be taken from the banks and restored to the people to whom it properly belongs. End quote. What are the chances that's going to happen now, Lynette?
Well, frankly, that's exactly what I wish would happen. And if enough of us understand the system and come together, then maybe after this reset, we've got a shot at it. That's my personal hope and prayer.
Now, you talked about the reset. You say it's coming. The central banks have printed us really into oblivion. They're all colluding together. They're buying up stocks. I just talked to Mitch Firestein about this. And, the concern about the reset. Well, let me ask you this. I ask all my guests, usually towards the end of the interview, about that 1988 cover of The Economist magazine, which shows a phoenix rising from a burning pile of fiat with a gold medallion around its neck. And the prediction at that point in 1988, based on the medallion saying 2018, was, get ready, guys. In 30 years, we're going to reset this whole system. And guess what? 2018 is just around the corner. So what does that reset look like? Is it a global reset, or is it just the dollar collapsing and we live like Venezuelans here in this country?
Well, actually, if it was just the dollar collapsing, I'm 100% certain it would have already happened. So this is definitely a global reset that we're dealing with. And the central banks have been getting ready for a while, and they've seen the tool to do that with. So no, I definitely think this is global.
Okay, so what does the timing look like? Are you, you say you're maybe a little surprised the dollar hasn't collapsed already, so the banks are all colluding to prop up this system a little while longer. When are they going to be ready for this reset?
Well, what you're really referring to is the dollar against other fiat currencies. But the reality is, in terms of purchasing power, the dollar has already collapsed. And we can see that, let me just show you. Okay, this is from the Federal Reserve, and this is the dollar from 1913. If you take off a zero, there's your dollar. There's officially 4 cents left. And I know that it looks like it's trailing off there, but this one takes it from when the central bankers were given full control of it. And you can see how much that's dropped off. And, lest you think it's flattening out, this is even a shorter term one since the crisis, and it keeps going down. So this is the purchasing power. This is really what impacts us, not the dollar against other currencies unless you're traveling, where you're exporting. So we're already, with 4 cents, they've already taken the purchasing power out. So I'm not saying they can't inflate more away. And with interest rates and 90% of the industrialized world anchored somewhere near zero, well, then where do they go since interest rates are what they use to regulate inflation? They go to negative. So they've gotten your purchasing power. Now they're going for your principal. They will force you to spend and then create that hyperinflation and then use that excuse to reset the system into what I think is a blockchain technology with a smart contract overlay.
Oh, now that's interesting. All right, so we've already sort of waded into the crypto space and the blockchain technology. Let me ask you this, and I just want your opinion on it. Do you think that the bankers, the central bankers, the Goldman Sachs bankers, the smartest people in the room, so to speak, are the ones that came up with these cryptos? Do you think that it's all been born from them?
Well, I think that they saw a possibility. So I know that they have really been working on this diligently. I think they might have poo-pooed it a little bit in the beginning, but they're definitely developing it to a very high level. And, the central bankers, seeing that you can hold all the information in one place with one button push. And I know people are saying, oh, but they're decentralized and they can go around the system. Well, I'm still certainly learning about that technology. It is a rabbit hole that I jump in regularly, but I'm certainly not going to say I'm an expert in that area. However, I've been studying central bankers for a very, very long time, and those people I know. And, I just don't see them giving up control easily.
Yeah, nor do I. Okay, well, let me ask you this then as it pertains to central banks, which control the world. And the world central bank sitting at the very top is the Bank for International Settlements. Below them, the IMF and the World Bank. So even if we were to, heed Thomas Jefferson's advice and throw off the chains of the Federal Reserve Bank, the rest of the world is still controlled by these central banks, and I don't think that's going to change short of a global revolution. But if we take a look at what's going on in India, for instance, you got 1 billion people being targeted with their cash being taken away, and they're not doing anything about it. There is no revolution happening. So I don't think it bodes well for us to ever throw off the chains of these banksters.
Well, I hope you're wrong.
I hope I'm wrong.
I really do.
I do too.
I think India is a good test case. So is Sweden is a very good test case. They're cashless, and now they're chipping their citizens so that they don't have any money. It's just all in one location. But there is also a global uprising, although it's been tamped down a bit with Brexit, with the Arab Spring, which came before that. So what they're going to have to do is feed people, because when people are hungry and hopeless, they make choices they would not otherwise make. So if they can keep people at least on some level fed so that they're not as hopeless, then, this could be a planned demolition. And on the other side, the goal is for them to remain in power. Right. So I know that's their goal, but I feel like a warrior. If enough people hear this and understand this globally, and you have global viewers, maybe we can make a difference on the other side of this reset. But the reset has to happen regardless.
Right. And I want there to be a peaceful global revolution, an awakening of humanity, where people finally come to the realization, and they are, but in small groups, right? Small groups on YouTube and, all over the planet, people are waking up to the fact that these banksters are the ones that have really enslaved humanity through the printing of their fiat currencies and then the manipulation of those currencies. And there needs to be an awakening. So to some degree, I think people are hopeful that the cryptos can offer an alternative to this slave system, right? But we can see Goldman Sachs getting patents on cryptos, or JP Morgan, I think, just got a patent on one. And so we can see them now taking action to try to retake control of that space.
Oh, absolutely. Actually, in the World Economic Forum a few years ago, they all came together. And so all of the larger banks, the same guys always, same names, Goldman Sachs, HSBC, and they've been and the central banks and large corporations have been putting billions, probably trillions, into developing this. technology, and they're testing it all the time, and they're coming out with all of these crypto bonds now, and this is a new thing, but they need us to get comfortable in that space. So, people may feel safe and comfortable there, but the reality is they could be shut down like that, and they will. I mean, they have and they will, until they're ready to come in riding on their white horse and save us as a major crisis that is very obvious unfolds. So yeah, they're not going to give up that space easily. Why would they give up that monopoly?
Right.
But the quiet, what people forget is that we vote with our purse. So just like when they put TSA in, when did they do it? 2 days before Thanksgiving. So if people at that point said, well, I'll pass on Aunt Bessie's turkey dinner this year, and if everybody refused to cross that line, then they couldn't have put in and taken away more of our liberties in that regard. So that's when you talk about a quiet revolution, we just have to refuse to go along. But enough of us have to refuse. And I think that, talking about India, they've also been on a massive campaign to create nationalism. And that's how I think they're getting away with a lot of it. But they're learning how to control the masses. But we just have to say no and refuse to use it.
Well, yeah, and as you probably recall, Lynette, the plans to invade Afghanistan were sitting on the president's desk prior to 9/11. So conveniently after 9/11, they could just roll the troops right in, and poppy production went from an all-time low under the Taliban to where it sits now an all-time high, and we have a heroin epidemic all over the streets of the United States. So I do think that these things, they hatch these plans in secret, and then they use opportunities, they use events to roll the plans out. So what will the plan be that will be rolling out after the collapse? What does the reset look like? I heard you tell Greg Hunter the system has to reset, and any financial instruments in the system will have to reset too. Pensions, savings accounts, what does it mean to the average American?
Well, to the average American, it means that their wealth evaporates. I mean, you may get a statement that says you've got $1 million in your portfolio, but you can't use it. And when the dollar resets, the way that they do it is, since fiat money has no intrinsic value, in other words, it's only used in one area, right? They reset something with no intrinsic value against gold, which is all intrinsic value, because gold cannot be destroyed. It's divisible. It has all sorts of factors, but it's used across the global economy. So there's always use for gold, and they revalue the currencies against gold. Then gold, in terms of those currencies, rises to its fundamental value as basically the fiat money inflation is burned out of other assets, and they go to their fundamental value. And what I'd like to point out here is, if what you have, so the stocks, the bonds, the mutual funds, the ETFs, the annuities, the CDs, the savings, this is what it's based on. So if you have something that's created from dollars, pays you out in dollars, and can only pay you back in dollars, when the dollar goes to zero and it's at 4 cents now, what's the value of those things? So what happens to those people that are depending upon them? Look at Venezuela. You become completely dependent upon the government. And food becomes the biggest issue for people. That's why I became an urban farmer, quite honestly. Okay, so food becomes the biggest issue, and you'll buy whatever you can get your hands on in an attempt to hold your purchasing power, so that you can barter with someone that might need what you have. Toilet paper actually becomes pretty scarce during these periods of time. So essentially, you have three economies that kind of grow up parallel, and then you have some overlap in there. But you have the one economy that only has fiat money. And in that case, they are in abject poverty. So 90% of the Venezuelans are in abject poverty. I didn't say 100%, but 90% are in abject poverty. Then you have those that have skills or other physical assets. Well, any talent, any physical asset is barterable. Maybe a little more challenging if you don't have what somebody else needs, etc., but at least it's barterable. So typically those people do okay through this. And then you have those that have put wealth in good money. So physical gold and physical silver. And frankly, their standard of living typically doesn't change very much. And in fact, they have the ability to expand that wealth base.
Right.
You know, and we've seen it.
Well, because if you have physical gold and silver and you're sitting in Venezuela, you're going to be able to buy all sorts of tangible other goods that have lost their value. For instance, property, right? You're going to be able to buy a lot of property in these devalued Venezuelan dollars, I suppose, if you exchange some gold or silver for devalued fiat, correct?
Well, yes, you could pay off a mortgage like right now, and I do have that. Here, just bear with me for 2 seconds. Okay. So this is, this paper would be sticky. Okay. But this is what's happened to gold in terms of the Venezuelan bolivar. So it's 169 bolivars here. Here in 2011, they confiscated the monetary gold. And on June 28th, it was 10 million bolivars for an ounce of gold.
It went from 169 or something to 10. What is it again? Give us that again. That's incredible.
Okay, 169, and it was pretty steady, and probably the middle-class Venezuelans could have afforded it. They confiscated the monetary gold, they nationalized the mines, and then about a year later is when their hyperinflation started to kick in. And when I pulled this on June 28th, it was 10 million bolivars for 1 ounce of gold.
Now, you know that people think that can't happen here, Lynette. I think this is the clarion call to our listeners. People in this nation, my friends, neighbors, and colleagues, I've been preaching about this stuff for, going back to 2009, 2010, of course, covering the collapse in 2008. It can happen here, but people have this normalcy bias. They just don't believe it's possible.
Well, that's because they know how to make the shift. And what they're missing is not only can it happen here, but it's happened here up to this point 5 times. Now, typically, you brought up war, but typically, historically, governments go off the gold standard to fund a war. So the War of 1812, the Civil War, there's another one, okay? So they were on the gold standard, they went off, they hyperinflated, then they crashed. Because at that point in history, central bankers had a limited charter, typically for 15 to 20 years. And wars would last typically about, 4 to 8 years inside of that charter. And then they were gone and they'd go back on the gold standard. And there were, on average about 40, 45 years between wars. Once we legalized the Federal Reserve in 33, well, then a lot of that, a lot of that changed. And in 1914, we had the First World War. So it's kind of interesting that the First World War would coincide with the era of central bankers. And what the Keynesian economics did that had not been done before, and it is genius, it really is that they looked to control the speed and rate of inflation. So that's why we don't think that it's so. But what they did from 1912 to 1913 was they took us from a gold-backed dollar to a partially gold, partially debt-backed dollar. So prior to that, a 20th of an ounce backed a $1 bill. After that, a $1 bill backed $2.40, which is why you see this massive dip in purchasing power right here, 50%. That never happens on a gold standard because it restricts how much debt the government can grow, okay? So it happened right here. But what they did, not only did they keep the name, but they allowed the barterability and the convertibility to remain the same through the 20s. You had the stock market, the bond market, the real estate market rising, and then they engineered the crash and they encouraged debt like crazy. So margin debt was at highs. The differential between incomes was at highs. But then in 27, they gave the central bank a perpetual charter. So that was historically the first time that that happened. So they originally had a 20-year charter. That was 33. They used the crash to justify taking the only tool away from the citizens. So to say that it never happened before, well, that just wouldn't be true. In 33, which was the conclusion to the first part of the transition, stock markets imploded, the gold market exploded, the dollar market imploded, inflation was rampant. Okay, so I know they say it was deflationary because any big crash is deflationary. People stop spending money and assets implode. But I don't know. That looks like it happened there. I mean, it's what it looks like. And again, in 71, when they made the final conclusion, look what happened to the gold market. Now, this is spot gold. They created spot gold after Nixon handed all power to inflate to central banks. They knew there was going to be an initial run into gold. But I want you to think about this. In 1965, for the first time since 33, they allowed the average citizen to hold gold certificates again. Now, who knew about that? The guys that wrote the laws. You think it's possible that they bought those gold certificates at the fixed price of $35 an ounce, knowing full well that they were going to go completely off the gold standard and be able to convert them into real gold? Or what happened to real estate prices then? What happened to the stock market then? Take advantage of those massive declines because they held their purchasing power into this transition? And that's why I always look at what the smartest guys in the room, the guys that can control stuff, not what they say. I listen to what they say, but I go underneath and I look at what are they doing for themselves. Can I emulate that in any way, on any level? And then that is my preference. So they're denying their own experience. But what was the same in 1971? In January of 1971, it was at least a partially gold-backed dollar. In December of 1971, it was a pure debt-backed dollar. I had dollars in my pocket that time. I didn't know that anything had changed with them. I knew all the chaos. So they kept it the same. So my bet is when they make this transition in this country, we'll have the dollar coin. Because they knew, and it's in their documentation, that people marry the legal money of the state. So, and exactly what do you think this is? Okay, the only difference between this is really a reflection of inflation. The only difference between inflation and hyperinflation is the speed of that inflation.
Right.
I'm thinking 96% is an awful lot of inflation.
You're giving me goosebumps here because I think it's important to visualize the collapse. It's just as important to visualize the collapse as it is to discuss the collapse. And I've been saying that the collapse has been happening for decades. It's just been happening in slow motion. Now, guys, I want to read another quote here for you. We started with a quote from Thomas Jefferson. Let's get one here from Andrew Jackson. And keep in mind the collapse of 2008 and tell me if this doesn't sound familiar. Jackson said, and I believe he was addressing essentially the Rothschild Central Bank, "Gentlemen, I have had men watching you for a long time, and I am convinced that you have used the funds of the bank to speculate in the breadstuffs of the country. When you won, you divided the profits amongst you, and when you lost, you charged it to the bank. You tell me that if I take the deposits from the bank and annul its charter, I shall ruin 10,000 families. That may be true, gentlemen, but that is your sin. Should I let you go on, you will ruin 50,000 families, and that would be my sin. You are a den of vipers and thieves. I intend to rout you out by the eternal God. I will rout you out." End quote. Unfortunately, he was not able to rout them out permanently. They resurfaced in 1913, and it just destroyed our system, Lynette. And what we're trying to do here is save people from the Great Reset that you and I both know is coming. Now, you mentioned gold, you mentioned silver. How high will they go in your estimate? I don't think anybody can estimate, but if you had to guess, how high do you think they could go when priced in this new dollar system or devalued dollars?
Okay. Well,
Or what are they worth now?
well, that's probably a better question, because you have to look at how money is created in the system, which is debt. And most countries, including our country, stopped publishing how much new money they were printing, the M3 supply, back in 2006. So what I do is I use debt as a proxy for all of the new money that's been printed. And you see what they do when they do that reset is they cover some level of how much money is out there. And that we're not going to know until they do it. But since gold is finite and debt is infinite until nobody trusts it anymore, easily put, and I'm not going to get you to the penny, but at least I'll get you to the vicinity. You take all the debt, you divide it by all the gold that exists. And so right now that number is somewhere, I did this a little while ago, but it's somewhere north of $9,000 on gold in terms of dollars, and $600 in terms of silver. And what I think is interesting is people go, whoa, 9,000. Well, that's because we've been trained to put value in dollars when they have no value until you convert them into a good or a service. So what gold primarily does is it holds your wealth even. We could be like Venezuela and see gold at 10 million, or like Germany, 87 trillion marks for an ounce of gold. It's just that at that point, the currency has no value. You can't convert it into anything, so you can pay a mortgage off with it. So there will be some things in that period of time that you would actually most likely convert the gold to directly, or the silver to directly, and bypass the currency completely. If you're working with somebody that's private, that's going to be their preference, my bet is, because that's what history tells us. And in that other case, if you're going to do something like the gold mining stocks that you brought up before, well, that you're only going to be able to do with the fiat money. So you would convert it and pay for it. Just boom, boom, and property taxes and things like that. Those you're going to have to convert, but you convert and use right away, because otherwise it continues to lose value. That's what it looks like. This is what it looked like in the U.S. in 71. This is what it looked like in 33.
Yeah.
That.
History repeats itself, and for those who don't remember history, you're condemned to repeat it, as has been said. So let me just ask you one more thing here as it relates to stocks. You brought up gold stocks. Let's just talk about the stock market in general. It has been on an absolute tear. We know the S&P has been buying stocks, Microsoft, Apple. I think all of the central banks are probably buying stocks to prop up these markets. People think they have all of this wealth if they have Amazon at 1,000, or if they hold Apple. When they don't hold the actual stock certificates, I think ultimately most of those certificates are settled, after 3 days and end up in some vault with Seed and Company or somewhere. What happens in a collapse? People think that the stock market can't collapse, and yet back on June 9th, there was a NASDAQ glitch. And more recently here in July, there was another NASDAQ glitch in which I think Apple, Microsoft, and Amazon all got reset at $123 a share, which was a 90% decrease for Amazon, I think. It was a crash. And the difference will be in the future if that happens and the NASDAQ says, whoops, well, we can't reverse it. The system's broken. You're just out of luck. I guess what I'm trying to say is that I think that the wealth we see in the stock market is just as illusory as the wealth we see in our pockets. Do you agree or disagree?
I agree 100%, and that's part of the plan, because the central bankers say and admit that a benefit of inflation is that it makes other assets look like they are going up. And listen for the word nominal, because when you hear that term, it means you have no idea of the true value. And they use it all the time on mainstream media. And look at this. This is from Bloomberg. This is the central bank balance sheet and the stock market. So when you made that statement, absolutely, and even mainstream media admits that. But this is what happens. And I think we're in a melt up phase anyway, because these markets can't correct even 4%. So this is the Venezuelan stock market,
Wow.
which who was best performing in 2013, but there's no liquidity. Okay. And the Treasury's been telling us there's no liquidity in the Treasury bond market and the stock market since 2013.
Can you show that again? That's a very, very powerful chart, because for those of us that visualize the stock market only going up, your point here is that when the SHIT hits the fan, right, there will be no liquidity there's nobody to sell your shares to. Nobody's going to buy your $1,000 Amazon stock.
Exactly. Because in 2008, when the crisis hit, that actually killed the market. Right? We went on life support. This is the VIX from the Treasury market. And you can see how before that it was dashes. So that was easy price discovery. And then when the crash hit, this is when the central bank started all the QE programs to protect it. But what also happened during that period of time is that, a lot of Wall Street became banks, right? They ran to the safety of the Federal Reserve, and where they were once market makers, in other words, their task in a decline was to go in and create a bottom on the market. And then they would accumulate the bonds or the stocks or whatever and sit on them until they could sell them off. Well, that's gone away. And in fact, according to the most current data that I've looked at, you have 75% decline in liquidity in the stock market and a 70% decline in liquidity in the bond market. So the liquidity, this is where the liquidity is coming from. This is the markets have been hyperinflating. It's a hyperinflationary pattern.
Right.
That's, this is the monetary base. That's a hyperinflationary pattern. So are the Feds buying Treasury bonds, which now everybody's saying they're going to start selling that stuff off. If they do, who's going to buy them?
Yeah.
They're going to make the pension funds buy them? Maybe, right? The mortgage-backed securities, which are derivatives, who's going to buy them? They're buying 30% of the current market, and then this is the reverse repos when they supposedly stopped in 2014, when they presumably stopped adding to, well, then they just started doing these other shenanigans. So maybe they will. Maybe they're ready, but who's going to buy them? And how is that going to impact interest rates if the buyers that buy the most stop buying?
Yep. You're saying exactly what I've been saying about the stock market. I believe the stock market has been hyperinflating, and these nosebleed prices in NASDAQ stocks tell us that there's hyperinflation in the system. It's where they're hiding the money.
Right. Because, everybody's saying, see, there's no inflation. There's no inflation. Well, I suppose they must have somebody else buying their food and paying their bills, because that is not what most people are experiencing on their day-to-day costs. But all of this money printing that they've done, it's gone into the banking system. It's gone into, there it is. It's gone into the stock market, the bond market, the real estate market, because all of that, it's not just there, it's those derivatives that have been created that are based upon the price movement of the underlying, whatever it is.
Yeah.
And that market, there's no way to bail that one out.
Right. I'm finding
this
is such a fascinating conversation, because I keep thinking we should probably wrap it up here, but then all these thoughts pop into my head about, we haven't even talked about the LBMA rigging of gold and silver, the Deutsche Bank collusion with other banks rigging the prices of gold and silver. We haven't talked about the LIBOR manipulation. All of this stuff is a stack the deck strategy to keep this system going and to hyperinflate everything without people even knowing that they're being looted. And so I guess my final question for you, so that we can wrap this up and I can let you go, is when you mention those prices of gold and silver, you're mentioning them in known dollars. We're not even taking into account derivatives. We're not even taking into, it could be so off the charts. And here's the problem: because of the manipulation of the precious metals by these criminal international banks and central banks and, the LBMA and the COMEX, because of the manipulation, it has now become passé, even in the alt media, to say buy physical precious metals to protect yourself. People are worn out. They don't believe silver's ever going higher. They think this thing's going to stay capped forever. And to me, as I said to Mitch Firestein in my interview, I think that is the mark that the end is near, because even people that know about precious metals are sick and tired of hearing about it and don't want to spend any more money on physical silver or gold.
Right. Well, it is all the manipulation. I'm sorry, I'm not quite as organized as I usually am. But yeah, people somehow, every day you open up the paper and the banks are paying some kind of fees for some kind of manipulation in every single market. And yet they look at what Wall Street's post says, well, this is what gold is worth, this is what silver is worth. I mean, according to the Bank for International Settlements, before they changed the way that they accounted for their derivatives, they had 63,000 ounces of gold for every 1 ounce of physical, derivative gold, I mean, for every 1 ounce of physical. And in the COMEX exchange, I think it's something like 542 owners for every available ounce of gold for delivery. Well, look, you can't short a bank stock, but you can short as much gold as you want. In fact, it's dirt cheap at the CME to do it, whether you're a bank or whether you are, whether you're a bank or whether you're a central bank or a corporation. So yeah, it's all about buying time and distance, keeping as much wealth in the system as possible so that as much wealth transfer. Because what do you do when the computer says no? What happened in 2008? Could you go give me my money back? Of course not.
Yeah.
Doesn't work.
Yeah. All right. Well, you know what, guys? I think this is one of the most cogent and lucid and important interviews I've done in a long time because of the charts, because of the different perspective, and because Lynette is new to the show here. I think this is one everybody should share on social media with their friends, neighbors, and colleagues because, again, this is a clarion call. Right? This is not two crazy people saying the system's going to end. This is two well-informed people who understand who these banksters are. You said it was a brilliant system, this Keynesian system. I agree with you. I think it's satanic in its brilliance.
Yes.
And so when we talk about their ultimate plan to chip us all, you can really rewind time 100 years and think that this thing was hatched with satanic brilliance, and now their end game is near because they are going to roll out these chips. They want to chip us all, put us on their digital forms of money, and then if they don't like your politics or they want to starve you out because you're a revolutionary, they'll just turn your chip off.
Exactly.
All right, I'm fired up because... Go ahead.
I'm sorry. I was just going to say, it's food, water, energy security, community, barterability, and wealth preservation. Gold and silver perform your barterability and your wealth preservation. And then you want it in the form that you're most likely going to be able to use it, or at least I do. Anybody can do whatever they're comfortable with.
Yeah, me too. All right, so I use SD Bullion to buy my silver and gold. They are great supporters of SGT Report, but you work over there at ITM Trading, and I want to give you an opportunity to talk about your company. Do you guys also sell precious metals?
Yes, that is actually how we earn our income. But what makes us different is that we have a strategy here. So that not only are you buying the precious metals from us, that we consult with you. So whatever we put you in is based upon your circumstances, your goals, but we also help you understand how to use it through the trend cycle to sustain your current standard of living, as well as grow your wealth base so that on the other side of this mess, now you're positioned properly, because people also forget this. 100% of the time, because there is absolute demand physically for both gold and silver, they never go to zero. All those other things can go to zero. So you can always convert any gold and silver into any currency, any good, or any service. The same cannot be said for fiat money. And frankly, digital money hasn't really been tested yet. I mean, that's still only been around since 2009, the blockchain technology. 2009. It's not been tested yet. So that's what we do here, and we work as a team, and we pay a lot of attention, as you can see.
Yeah, no, I see that you're passionate about it, and that's what I think. That's what I love about this interview, and I love your passion. So I guess just one final word, because we didn't really bring it up in the interview. Pensions, those that are going to be relying on pensions in the future, we can see what's going on in the state of Illinois with the bankruptcy. People are going to get a 60, 70% haircut in their pensions. That's just one state. On a federal level, when this collapse comes, what does it do to these pensioners, and what advice can you give them if they're listening to this and they are concerned? Because I'm telling you guys, what we're talking about, this is not a theory. It is going to come to pass. It's a fact. What we just discussed is going to happen. So if all you have in the future is your pension, Lynette, what would you suggest those people do?
Gosh. Well, the pensions are basically 50% in the second most expensive stock market in history and the most expensive bond market in history. And the rest of it is in derivatives and commercial real estate, which are not liquid. So when this system resets, I mean, you're going to lose your pensions. The Social Security has been underfunded forever. So whether it's now I'm not saying that every single private pension plan is underfunded, but most of them are. The PBGC anticipates something like 248 billion in underfunding over the next couple of years. So it goes back to food, water, energy, community, security, barterability, and wealth preservation. And it goes back to those three things. You need to make yourself as independent as you possibly can. That's where community comes in. I have eggs. Maybe somebody else can build me a shed if I need it, and I can swap with that. And that's what you have to do. You better not rely on it because it's not going to be there. Or if it is, this is what happens with whatever it is that they give you.
Right.
Right, the purchasing power goes to zero.
Right, and I want to one final word here. Again, people are really tired about hearing about physical silver and physical gold. I just want to say one last thing before we part ways. For those that are listening that think I don't have any extra money to buy silver or gold, right? I caution you to dig a little deeper and think about it a little harder, because right now, if you can scrape up $170, you can buy 10 ounces of silver.
Right.
For less than $350, you can get a tube of Silver Eagles. This may be something that will be a real game changer for you when the system collapses. It may really be a lifeboat for you and your family, especially if you can stack 1,000 silver ounces here before this crash. That's just my opinion, Lynette. So last word from you.
Well, and that is a really good point. And in addition to that, what I'd like people to understand is that gold and silver in any form is monetary at its base. So if you have anything, could be Aunt Bessie's silverware, it could be a necklace. I even have some sterling silver chopsticks. It doesn't matter the condition of them at all. But sterling silver is 92.5% pure. 925 silver is also, which is Mexican silver, is also 925 pure. 14 karat gold is 58% pure. 18 karat gold is 75% pure. So no matter what the form, there are lots of ways to accumulate if you don't have much money. But remember that middle area where you could barter with your talents or anything physical, stack whatever you can. In the metals, the difference between silver and toilet paper is simply that it's universal. Okay, but both of them are physical and both of them are barterable. And so just realize any form, doesn't matter what the condition is, just stack it.
All right, I agree. And last word from you, shout out the website and how people can get a hold of you for any additional assistance.
Well, first of all, we've got a lot of great team members here. So our website is itmtrading.com, and then on YouTube, that's where we publish every week different YouTube videos. And so it's YouTube ITM Trading. And give us a call, 888-696-4653. And I'm very certain if you talk to any of our team members, you will be very impressed with our approach. It's really good. And then I oversee everything with the team members. But yeah, we all work together as a team here.
All right, very good. Guys, if this information resonated with you as much as it's resonated with me, please do share it within your own sphere of influence on social media. Share the link, direct people to this very important interview. I think you really can wake up some friends, neighbors, and colleagues with this information. This is concrete data. This is not subjective. This is not speculative. This is concrete data about what's coming. Our guest has been Lynette Zang, former stockbroker and chief market strategist at ITM Trading. Lynette, thank you so much.
My pleasure. My pleasure. It's been very enjoyable. Thank you.
Oh, thank you. And guys, thank you so much for your support at SGT Report, where we are working hard right now behind the scenes to bring you a mobile-friendly version, a new and improved version of SGT Report, where it will be easier to load, easier to comment, and hopefully better all around. So thanks for hanging in there with us. We really very much appreciate your support. And a special shout out to our patrons over at patreon.com/SGT. You're making a huge difference for us to keep us in the truth fight. Thank you so very much. God bless. You know, I don't wish this collapse. I've been telling people this is not, I'm not a doom and gloomer because it excites me. I think it's going to be hell on earth.
Right. I mean, they're looking for something major. It's happening.
We always talk about, like, we hope we're not right, but we know we are.
Well, but the thing is,
everybody's going to suffer.
Right.
Isn't this a collapse?
Yeah.
Isn't this a collapse? It's just, that's the genius of Keynesian economics
And perception management.
and perception management, is that they control that collapse.
Yeah. Well,
You know?
I sure wish that we'd all been on, you know, I mean, I was telling Mitch, oh, by the way, should we book that for, so Tuesday the 3rd at noon Central?
That works.
All right, great. I was telling Mitch Firestein, I remember when Amazon was $5 a share, you know, when it readjusted back down after the internet bubble crash. You know, I remember Netflix at 14. I remember Apple at 12. And it's just funny. Now you look and you're like, if you'd been lucky enough to buy 1,000 shares of each of those, you'd be a multimillionaire and you could take some of this fiat out and buy boatloads of gold and silver.
That's true.
And that's probably what the elite are doing.
That is, well, actually, I even have a graph on that. Well, really, I mean, if you want me to talk about insiders, you know, I mean, if you have something you want me to talk about so that I have the charts for it, the insiders are getting out like crazy, and the rare coin market, where they're up in the hundreds of thousands and millions of dollars, is straight up like this. What do you think they're doing?
Yep.
You know, I mean,
yep. The smart money is.
That's why I look.
Yep. The smart money's getting out and buying private islands and getting offshore. And yeah, we didn't even talk about the Deagle.com predictions of a depopulation event in all these Western countries. You know, one wonders.
Well, that's what happens during a hyperinflationary event.
Yeah.
I hate to say it, but it's true.
No, it's terrifying. I know. All right. Well, I've really appreciated this conversation. Thank you. And I look forward to October 3rd.
Great. I look forward to it too.
All right. God bless.
Nice to kick off that birthday month.
Yeah. God bless. I'll send you guys a link once this is posted.
Excellent. Thank you so much, Sean.
Yeah. My pleasure.
Appreciate
Bye.
it.
Thank you. Bye.
It's a concerted effort to, in the first time in history in America, to have a coup d'etat of a sitting administration by creating an environment of Russophobia being the key feature with absolutely no evidence whatsoever